You've been lied to. What the big banks don't want you to know. The last couple of years have been tough. Economically, we have seen shutdowns, high unemployment, volatility, and a lot of hardship. Meanwhile, our banking friends have done quite well. In fact, they have nearly doubled their net worth. While we suffer, they profit. The four largest banks increased their value from $663 billion to $1.2 trillion during the health crisis, an increase of 88%, despite the slowest economy since 1938. Now, how did the banks make so much money? Federal Reserve injected $4.5 trillion into the banks as bailouts. Banks act as a middleman for lending to small businesses. So why can't the Federal Reserve lend the money directly to us? In a recent podcast, host Robert Shear laughed as he said, "It's incredible. If you didn't call them banks and you called them the mafia, it would sound like a real scam, right? They get the money for nothing and they turn around and charge you, 13, 15, 18, even 25%? The banks don't want you to pay attention to this kind of information. And the banks are lending less and less money to the public. As Bloomberg reports, biggest U.S. banks keep lending less and less of their money. What are the banks doing with all this money? They are actually lending the money back to the Federal Reserve, $1 trillion a day. They're sitting on so much printed cash, and idle cash doesn't do anything for them, so they accept a very low interest rate and lend the money back to the Federal Reserve, who printed it and gave it to them in the first place. How would you like that deal? What gets me is that the banks have not even paid back the bailout they got in 2008 from the housing bubble. Of the $700 billion bank bailout in 2008, only $390 billion has been returned. The outstanding funds have made the banks an additional $353 billion. Our tax dollars hard at work. Meanwhile, I think banks have made violations part of their business strategy. It seems that it might be more profitable to break regulations and pay fines than doing things the right way. Violation Tracker has the big banks paying since 2000 over $332 billion in fines. And banks worldwide amassed $15 billion in fines in 2020. U.S. banks account for 73% of that. The U.S. government fined Wells Fargo $3 billion for its staggering fake account scandal. That scandal targeted seniors and retirees, people working hard trying to make it through their retirement, saving their money in the quote-unquote sacred institutions of banks who are supposed to protect them. And meanwhile, the banks are breaking regulations and causing these people harm. While we're all suffering in 2020, and the banks are getting all this money from the Federal Reserve profiting, the CEOs increased their personal salaries. The list is incredible. Let's take a look at the top three, starting with Bank of America at $24.5 million. Next, JP Morgan Chase at $31.5 million, and Morgan Stanley, $33 million. These people are making an incredible amount of money, while the tax dollars and the Federal Reserve are giving them an incredible amount to work with and profit from. I'm sure the big banks don't want you to know about this. Next time you walk into a bank, remember what they're making in 2020 and ask yourself, what did you make? Probably less than 1%. So who are they really protecting and who are they working for? You have been lied to. The big banks don't want you to know, but now you do. So make sure you subscribe. Up next, what the financial institutions don't want you to know.